Greetings, everybody. Welcome to Liberty Call. Today is Friday, July 21st, 2023. Hope everybody's having a fantastical day out there. I am Raymond Dahlman, your humble host here at the Liberty Call. And I'm glad you're here. If it's your first time watching Liberty Call, please give me some thumbs up, like, share, subscribe, follows. Hit all the buttons down here. Send it off to all your friends. I would greatly appreciate it. Kind of a meh day in the market again. The NASDAQ finished in the red, and the Dow and the S&P were, kind of back and forth, and then finished off the day pretty flat. So we'll see where this is going to lead long term, but I personally don't have good feelings about where the markets are headed, at least through the end of the year, and then we'll see where they're going. So, all right, well, let's go ahead and jump into the numbers for today and see how they turned out. The Dow Jones was flat at up 0.01%, 2.5 points, closed at 227. NASDAQ was up 0.03%, closed at 45.36. NASDAQ was down 0.22%, closed at 14.032. The VIX fell 2.79% today. It's down to 13.6. Canada was up 0.54. Brazil was up 1.81%, and Mexico was up 0.31%. Over in Europe, Germany was down 0.17%, UK was up 0.23%, France up 0.65%, Netherlands up 0.54%, Spain up 0.55%, Italy up 0.14%, Switzerland up 0.05%, and Portugal up 0.26%. In Russia, they were mixed today again. The MOEX was up 0.21%, the RTSI down 0.41%. And the overnights, the Nikkei in Japan was down again, down 0.46%. Australia down 0.15%. New Zealand down 0.55%. In China, the Shanghai was down 0.06%. Same with the Shenzhen component. China A50 was up 0.24%. DJ Shanghai down 0.04%. Hang Seng up 0.8%. And the Taiwan weighted down 0.78% for the day. All right, so like I said, kind of just a meh day, nothing too good, nothing too bad. We'll go through the recap in a minute and see what they have to say. But let's go ahead and look at the weekly returns of the U.S. indexes. Starting out with the Dow Jones, looks like it's going to finish the week off up about 2.09%. The S&P 500 up about 0.6%. The NASDAQ going to finish the week off in the red, down 1.17%. The Dow Utilities finish up about 2.45%, and the Dow Transports finish the week off up about 2.69%. So the three major indexes, the Dow was pretty good, the S&P 500 was and then the NASDAQ was not good at all. So, all right, well, let's take a look back and see where the trends are at right now. Zoom out a bit. Here's the Dow Jones, again starting with the downtrend beginning in early January of last year. The Dow broke the trend late October, November-ish timeframe, and has just been trading sideways. And we've had this little bit of an uptrend here in the last couple of days, but we shall see what happens there. Same thing with the S&P, broke the trend a little later after the first of 2023. And again, how long is this rally going to last? I'm not sure. Depending upon what the Fed does, and everyone's hoping that the Fed stops raising interest rates. I personally don't think that's going to solve all the problems that they think it is, but hey, it is what it is. All right, let's go ahead and dive into the economic data this week. Initial jobless claims came in at 228,000. Forecast was 242. Last week's number was 237. Continuing jobless claims came in at 1.754 million. Forecast was 1.72 million. And last week's number was 1.721. So it went up by about 33-ish thousand, so not too terrible. Retail sales year over year grew by 1.49%. The forecast was 1.6. Last month's number was 1.96. Month over month only grew by 0.2%. The forecast was 0.5. Industrial production contracted by 0.43%. The forecast was 1.1% growth. Last number was 0.03%. So this is the first time we've had a negative number going back to, what was that, March of 21. So and what we know what we were coming off of from 20 and going into 21. So, all right. The industrial production month over month contracted at 0.5%. Housing starts for this month clocked in at 1.434 million. The forecast was 1.48 million. Last month's number was 1.559 million. The housing starts month over month actually contracted by 8%. The forecast was 7.2% growth. That's kind of a bit off. And last month's number was a 15% growth on housing starts. So it's kind of been just looking at the trend, it's like, we'll have a really big month and then a couple down months and then a big month and a couple down months and then a big month. So just kind of where the trend's been going of late. Alrighty, existing home sales came in at 4.16 million. Forecast was 4.2. The previous number was 4.3 million. And existing home sales month over month contracted by 3.3%. The last month's number was a 2.2% growth. And last but not least, the index of leading economic indicators month over month contracted by 0.7%. Forecast was a 0.6 contraction. So, pretty close to on target. So, all right, well, that was everything for the economic data. Don't you feel better out there in TV land? I know I do. All righty, well, let's go ahead and jump into the market recap. S&P 500 rises as defensive stocks shine ahead of big tech earnings. All right, the S&P 500 showed gains on Friday, primarily led by defensive sectors like utilities, as investors adopted a cautious approach ahead of the upcoming quarterly earnings from big tech companies. Chip stocks, however, rebounded with Qualcomm Incorporated rallying, boosting sentiment in the chip sector after concerns were raised by Taiwan Semiconductor sales outlook, which predicted a 10% drop due to weaker global demand, impacting chip demand. Big tech companies, particularly Alphabet and Microsoft, traded mostly flat to lower during the day as investors awaited their quarterly results, scheduled for release after the market closes on Tuesday. Both companies have seen significant gains in their stocks this year, driven by optimism surrounding the potential growth in AI demand. American Express reported mixed second quarter results with earnings beating expectations, but revenue missing on as customers reduced spending on the firm's credit cards. As a result, shares of American Express fell over 3%. Similarly, AutoNation faced an 11% decline as investors worried that easing car prices may affect margins, despite the automotive retailer's second quarter results surpassing Wall Street estimates on both revenue and earnings. In response to the upcoming big tech earnings and the Federal Reserve decision next week, investors exhibited caution and turned to defensive sectors like utilities and healthcare. Southern Company, the AES Corporation, and Nextera Energy were among the utilities leading the upward momentum. The possibility of a Fed rate hike next week is highly anticipated and mostly priced in, according to Investing.com's Fed Rate Monitor tool. As the focus shifts to Chair Jerome Powell's testimony, investors are looking for any hints about future policy decisions. Nomura, in a note, suggested that they expect a July rate hike to be the last one in the current tightening cycle. Well, should we put some bets on that? Should we say, are they going to raise in September? Are they not? Are they going to pause? Are they going to wait and see? So I think they're going to raise rates again, but that's just my own personal gut feeling. All right, next up, yen slides, dollar gains as Bank of Japan seen maintaining loose policy. Alrighty, the Japanese yen weakened against the dollar on Friday following a Reuters report suggesting that the Bank of Japan is likely to maintain its key yield control policy unchanged in the upcoming week. Bank of Japan policymakers prefer to observe further data on wage and inflation growth before making any adjustments to the policy. While the central bank has seen inflation surpass its 2% target for over a year, there is no consensus within the bank, and the decision may be a close call. The dollar gained 1.24% to 141.81 yen, reaching its highest level since July 10th, and is on track for its best weekly gain against the Japanese currency since October at 2.22%. However, the dollar remains below the 145.07 level reached on June 30th, the highest since November 10th. The Bank of Japan's policy decision is considered a potential major market-moving event, and while expectations are for the bank to maintain yield curve control and unchanged rates, there may be room for surprises. The dollar's strength against the yen may put pressure on Japan's finance ministry to support the currency, and Japanese authorities have stated that they will consider all options to address excess volatility in the currency market. Investors are closely monitoring upcoming central bank meetings from the Federal Reserve and the European Central Bank next week. Both are expected to raise rates by 25 basis points. Comments from Fed Chair Jerome Powell following the rate decision will be scrutinized for hints on further rate hikes. The Fed funds futures traders are pricing in 33 basis points of additional tightening this year, with rates expected to peak at 5.41% in November. The dollar index, which tracks the greenback against major peers, rose 0.3% to 101.06, heading for a 1.14% weekly gain. The euro fell slightly against the dollar to 1.1123, and the pound experienced its sixth consecutive daily loss against the dollar, heading for a 1.75% weekly fall, the largest since early February. All right, so currency markets are kind of shaky right now. We're kind of waiting to see what Japan's going to do. I don't think they've done a lot of tightening. I'd have to go and look, but I don't think they've done much over the last year plus, where our Fed and the ECB and I know I'm missing somebody. They've done some major rate hikes. Oh, the British, the Bank of England. So, all right, last up comes from our friends over at Mises Wire. It's titled "Taking Back the Meaning of Inflation." Inflation's in quotes, and this was written by Joshua Mahorter. Let's see what Joshua has to say. All right, in this thought-provoking article by Joshua Mahorter, the focus is on the significance of accurate definitions, particularly regarding the term inflation. Mahorter highlights the language evolves, or how language evolves over time, often leading to imprecise and slippery definitions. The author's interest in this issue arose from observing the widespread misunderstanding of inflation as rising consumer prices, while in reality it is the consequence of a more profound economic phenomenon. Mahorter argues that inflation should be correctly defined as the artificial increase of money and credit, commonly referred to as printing money. I know I say that a lot. This perspective aligns with the views of Austrian economists like Ludwig von Mises and Murray Rothbard. According to their definition, inflation is the act of expanding the money supply, which can be carried out by central banks or banks operating on fractional reserves with legal authorization. The article delves into the negative impacts of the current misuse of the term inflation, which obscures the actual responsibility of governments and central banks for their monetary policies. This confusion hinders constructive decisions about the consequences of inflationary actions. Mahorter supports his argument by citing notable quotes from Mises, Rothbard, and Henry Hazlitt. They assert that inflation is not the increase in prices, but a rise in commodity prices and wage rates resulting from the inflationary expansion of money and credit. The article also examines the historical reasons behind the shift in meaning of inflation. The author attributes this change to ideological and policy disputes, including the failure of the British currency school to consider demand deposits as part of the money supply. As a result, the original definition of inflation was distorted. In conclusion, Mahorter calls for the return to the true definition of inflation as an artificial increase in the money supply and credit. He contends that by adopting the accurate definition, individuals can gain a clear understanding of the consequences of inflationary policies. Emphasizing the precise meaning of inflation will foster informed decisions and perhaps influence policymakers to adopt more prudent monetary approaches. That's pretty funny. People in government being prudent with our capital? I doubt it. Anyways, well, that article is linked in the show notes. If you'd like to read it in its entirety, you are welcome to do so. Mises Wire always has good articles linked there. So anyways, all right, well, that's everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information's there. I hope you have a wonderful weekend, and I will talk to you next time. Adios.